Hey guys and gals, it's Larry Williams, and I'm back to talk about a stock market correction ahead. Oh, I know I get so many comments that I'm a perpetual bull. No, I'm not. Actually, I love to sell short, but there just hasn't been any great long-term selling opportunities. But in terms of where we are right here, right now, I think we're going to see a stock market correction. I'd like to share my view with you on that. And by the way, stay tuned because we've got some really exciting news coming up a little later in this presentation. Okay, let's assume that we're going to have a decline in the future. How bad can it get? Well, here's some interesting comments. Jeremy Grantham, widely known market expert, predicts the S&P could plunge 50%. Noel Rubini says a doom loop in the economy. The Economist says we'll have a downturn of greater speed and magnitude than the Great Recessions. JP Morgan's longtime bull says now's the time to sell stocks, buy commodities. Billionaire Ray Dalio says stocks still aren't pricing the Fed rates in, a very harmful, very damaging level. So, whoa, it's got to be on our mind. How bad can it get? Here, when those people made that quote, Jeremy, March 21st, Robini, April, The Economist, March 22nd, JP Morgan, last year, Ray Dalio, last year. What's going on? None of these things happen. Lee Cooperman, who I met and had a nice, interesting conversation with a couple of weeks ago in New York, he sees it as a biblical thing. He's predicting the S&P will plunge 22%. It was view from February. Does it happen? No way. Mike Wilson at Morgan Stanley has been just a perpetual bear in here, continues to say sell off. So we see all this bad news out there. So if we have a decline, can it really get bad? How about this? Market will crash 47% of the next 90 days. That's what the rich dad, poor dad guy said. But wait, that was 96 days ago. So there's all this bearishness out there, but reality is none of this has come true. Of course, they keep saying, well, it will come true in the future, but they made these predictions quite a while ago, and the market continues to be in an upward trend. And I think it will be, which tells us, yeah, we can have a pullback here, but is it the end of times? No, I don't think so, not at all. It's just crazy talk to grab headlines. Here's another one. Experts are warning artificial intelligence, now that's the new boogeyman, could lead to human extinction. Oh, come on, get out of here. Really? Human extinction? It's just like the people that were saying, oh, the end of the world because the Senate and President Biden will not reach anything on the deficit and the budget. And of course they did. They always do. So don't get too wrapped up in all the headlines is my real point here. So where are the bulls? Are they there? Well, you need to understand today's news coverage. Everyone wants to be famous, which means get on TV. So how do you get on TV? You say bad things, and then you get on TV. So you're not going to find a lot of bullish coverage on television or in the newspapers or on the internet, because it doesn't really attract a lot of attention to say, oh, I'm bullish. I think things will get better. That's not an attention-getting mechanism as what we see on television and the newspapers and the internet all the time. Bad sells. So that's what really drives the markets. The solution, well, blow up your TV, don't watch it, or, and here's a really interesting point, fade them. Here's a personal story. Last week, Tom DeMark, a really dear friend of mine, was asked by one of the major networks to make a market commentary for the next day. And he said, well, I really don't have anything to say. And he said, Larry, do you want to do it? I said, well, I don't either. I've been saying the same thing I've been saying. So people that get on TV have to drum up things to say. So I think often you can fade these commentators, the talking heads on television. If you look at their track records, not all of them, but many of them have not been very good. So it's a really interesting trading strategy when you see some of these popular talking heads, especially the ones that are guests for a short time period, to pop up and say something. Really study that, because most of the time, they're actually not correct. So either blow up your TV, eat a lot of peaches. You got to find Jesus on your own. Maybe you know that John Prine song. John Denver also sang it. Or consider fading these talking heads because they are not always that good. There is some good news though right now coming in inflation. Let me share a very long-term chart with you going all the way back to 1970. The black line, of course, is the Dow Jones Industrial Average. The red line you're probably wondering about, well, that's inflation. And here's the interesting point. When inflation peaks, look what happens to stocks. Inflation peaks, stocks go up. Inflation peaks, stocks go up. Inflation peaks, stocks go up. Inflation peaked here, stocks went up. Pretty interesting, isn't it? That when inflation is over, in the past at least, usually we see stocks rally. Inflation peaks, stocks go up. Inflation peaks, stocks go up. Didn't work this time. If you like perfection, this is not the place to be. But eventually, and we did peak again here, stocks did go up. In 2004, we were in an inflationary time period. Inflation turned down. Look what happened to stocks. Before the big run up, and it was a huge, spectacular bull move in 2006, 2007, early 2008. Why? Well, look what happened to inflation. It had peaked, as it peaked at the lows in 2008. So we see a very strong pattern here. When inflation peaks, as it did in 2011, that's very bullish for stock prices. So you're probably asking, Larry, where are we now? Right here, right now, right? Well, here's that 2011 peak. We saw a peak in 2007, 2016, and inflation was going up, but turned down. Market rally, turned down, market rally. Just before the pandemic low, inflation had been going up, turned down. And here we are right now. We have seen a big peak in inflation. Now, what do you think? Is that bullish or is that bearish? Well, it certainly looks to me like the track record of the last almost 45 years here is very indicative that when inflation really peaks, that we typically see markets rally. So this, to me, is really good news to see inflation apparently is in the area of peaking. And it should get better. This is a very interesting chart. I'd like to draw your attention to it. You may not be aware of this. This is the annual inflation rate by month. So are some months more inflationary than others? Yeah, April, May are pretty inflationary, but then July, August start to come in and we taper off in inflation. So we're in this, I guess we could call it a sweet spot of inflation. The annual rate of change of inflation really starts to roll over about now, which would suggest that the numbers coming from CPI and the other inflation indexes will get better, not worse. So we have a seasonal bias here as well right now for inflation numbers to improve. And of course, that's significant because if inflation starts to improve, then what's going to happen? The Federal Reserve is not going to be as tight on the money supply figures and also on continually raising interest rates. So that's good news if that's what's happening with inflation. It looks like that will be the case. Now, here may well be the most interesting chart you're going to see in this presentation, because this comes from the New York Federal Reserve, the New York Federal Reserve Bank of New York, and they have said inflation persistence declined significantly in April. Those are their words, not my words. Now, if the New York Fed is saying that, the entire federal system is aware of what you see here. Inflation peaked in 2022 and has been going down, down, and down. Now, here's a telling point. If Jerome Powell, the head of the Fed, continues hiking interest rates substantially, then he has another agenda, in my mind, than driving down inflation. Inflation's been driven down. So there's a battle here. Is this just a bad guy, or is he just trying to control what's going on? Well, we're going to find out, because if we see a nominal increase in interest rates and Fed funds, or we don't see an increase in the next release, well, it would say, hey, they're seeing what we see, what the New York Fed says. We kind of whipped this inflation thing. It's probably going to continue coming down. So that's, I would think, would be the normal response, wouldn't you? So if he increases rates, what is his agenda? I don't know, but we're about to find out. So here's an update. We did this on StockCharts.com in 2022 and said this is what should happen to inflation. And look, 2000, that was the middle of 2022. This is what inflation has done, right? Inflation's come down in all the charts we looked at. Look at that. That was a prediction that we made in 2022. So we're still on track for that. The long-term cycle of inflation is to the downside and will be until about 2026, something like that. We should start to see even better numbers, which, as I pointed out earlier, is obviously really powerful for the stock market. There's another economic indicator I'd like to share with you. It's the employment ratio. It's the number of people employed as a percentage of the population. Now, a lot of people looked at just employment rates, but I stumbled into this in the Fed litany of indicators and numbers. And this is a better way to look at unemployment. What percentage, if you will, of the people are employed, not just what is the employment numbers. And as you can see, look at that. Every recession, we've seen this go down before the recession started. These gray lines, remember our recessions? It did work really quickly, but it came back up and it's been coming up. So if the employment ratio continues in an uptrend, that's positive. If it goes into a downtrend, that's negative. Got it? Pretty simple, right? It's probably the best long-term predictor of recessions that I've been able to come across. Well, we can look at that on a rate of change basis. So I'm taking this number and making it a rate of change, an annualized rate of change. And look what happens when this number turns up, the annualized rate of change picks up. Stocks are always at a market point where they rally. So that's really significant. However, I kind of did something a little I need to explain to you here. What I really did. I pushed stock prices forward. In other words, stock prices are predicting when this employment ratio picks up and gets good. Got it? And here you can see that stock prices will at about 6 months. And when stock prices start to come up, then employment starts to come up. Stock prices start to come up. Remember, this is led 6 months from this data, and employment got better. Same thing over here. So the suggestion is we're going to see this ratio get number, which is bullish for the stock market. It's bullish for the economy. After all, if more people have more jobs, they can buy stuff, and that's really bullish. So in this case, it appears the rally we've seen in the stock market is very helpful for job formation, and that's a good sign for the economy, suggesting the fears of a recession that have been beat about so much are non-existent. Winston Churchill, one of my favorite people. It's what amazing quotations he had, like the one where he said, "History will be favorable to me because I shall write it." What a sense of humor he had. He also said, the farther backward you can look, the farther forward you can see. He must have been a stock trader, a stock analyst. So much truth in that. The more back data we have, the better view of a future we have. And with that in mind, let me show you the next chart where we go back, looking at the Dow Jones Industrial Average all the way back to 1880. Ready for this? In this chart, you're seeing in black the Dow Jones Industrial Average. My cycle, though, in red is created from using data from 1880 forward. Now, those who always ask my cycle software, I use timing solutions to create these charts. If you're looking for the optimal cyclical software, timing solutions is certainly it. I get nothing for making that recommendation, by the way, no bias there. Okay, so my long-term cycles, major low here, major buying point here, major buying point here, major buying here. Oh, last year when we called the low in this market, duh, that was one reason why. Not only that, notice this, in the up move from the cyclical low to the high, we see straight up prices. Cyclical low to the high, oh, we had a pullback, but wow, we went to new highs in a hurry, and that was the pandemic. Cyclical low all the way up, no, stocks didn't crash, no, stocks didn't crash. And here we are now. We're all the way up into 2024. The cycle forecast is still strong, suggesting to me we're still going to continue going higher. We will have a correction. I'm going to get to that in just a moment. In terms of a close-up view of that long-term cycle, this is a very long-term cycle, a close-up view. We still continue moving higher during the year, but we have the short term to deal with. This is the best cycle roadmap, I think, where we are. The red line is a forecast of what should happen. And right here, right now, it says we should start to pull back into July, August, and then start to move to the upside. It's been a really good roadmap to follow, and this is what I'm following, and I think it might be helpful to you as well. So when should this next cyclical low come? Probably around the end of July, the 15th of July, first part of August. You can see this is a weekly chart, pretty consistent lows to lows here. So right now, I don't want to be buying stocks like crazy because next significant move should be to the downside. Cycles are general, they're not specific. So I'd like to show you another short-term cycle projection here, but they're all basically saying the same thing. We rally up until about the middle of June, and then we have a pullback in the market. Will it be that ultimate decline that all the bears have talked about? No, a pullback in the market as we then make higher highs. My blue line is a longer-term forecast. You can see, yeah, pullback, but we do go higher in this market. So short-term traders, intermediate-term traders may want to take some profits on this rally. I think we will see more of a rally into the first couple of weeks of June. And then let's look to take some profits, build up some cash to buy on the next pullback. June is typically a weak month. Here we're looking at charts from StockCharts.com, or charting service, and we see the seasonal pattern. This is June from here to here. We usually rally up like we've been and come right back down, usually around the middle of the month. That was 2000. That was last year. Here we are in 2022. Look what happened. There we go. We came back down. There's that June sell-off. Again, in 2021, there's the June sell-off. There's June, and right around the middle of the month, boom, down come prices. Here we go back to June 2020. Look at that, rallied up, look great, up, June sell-off in the marketplace. So this is a traditional thing we've seen a lot of over the years. I've talked about this before when I've done these presentations for StockCharts.com right here on YouTube. Here's an up close and personal view of where we are right here, right now. The market's rallied. This is what we should continue to see. This is the seasonal pattern. We've been following it. And I suspect we're going to start to follow it to the downside around, well, when? Let's zero in on that for you. Also notice the triple Qs and NASDAQ about the same thing. So there's a tendency in all market averages to decline somewhere around the middle of June. Exactly where? Let me show you. Notice in this, we're looking at the trading day of the month. If you were to sell on the 8th trading day of the month of June, there's been 23 years. And in those 23 years, on a short-term profit, we're going to get out in the first profitable opening after holding the trade a couple of days. That's made $22,000. 23 trades, 22 winners, 95%. Look at this, right around the 6th, 7th, 8th, 9th trading day of June. Look at the accuracy, 90%, 87%, 95%. And also trading day 15, right towards the end of the month, again, 95, 90, 91, 87, 91. So mid-month weakness in June, traders look for that, short-term traders. And again, right at the end of June, look for some additional weakness. So there you are, a potential nice short-term trade for June. If you look at the equity flow of that trading program I just showed you, well, there it is. It's been really good. One down year, that's been it. So clearly a strong opportunity coming up for traders on the short side. Okay, let's talk about specific stocks now. Let's talk about individual stocks. Most of you are following stocks. If there's stocks you really like me to comment on, just put it in the YouTube video stuff, put it there and I can do that. And also, of course, if you're watching this on YouTube, oh yeah, please do what everybody asks you to do. Hit the I like it button. Okay, so Tesla should continue rallying a bit, pull back into around the middle of June and then start back up again. So cyclical should start to move to the downside in about a week or so. Set up a buy point, probably late July, July 7th, something like that, and then moves back to the upside. There's your forecast for Tesla. Tesla in a longer term view, though, look at the blue line, longer term view. Yeah, we're going to go up, pull back, but Tesla's longer term view, that's a nice blue line as we see. You have a roadmap, Tesla. Guys and gals, it's going higher. We look at Tesla in StockCharts.com charts, we can see some really interesting things. The seasonal patterns start to kick up here. This is a great index we have in StockCharts.com that shows us when professionals have been buying the market, our money flow index. If we're buying here, we rallied. Buying here, we rallied. Buying back here, we rallied. So the next time you start to see Tesla pull back, check the money flow index. And if they start to get into the buy zone, we really locked in a nice move to the upside in Tesla. Here's a stock you might want to pay attention to. Moody's. They're a financial rating company. It sounds very boring, but I've noticed they're one of the largest portfolio holdings that Warren Buffett has. So if Warren's holding a stock, I'm interested in the stock. Long-term view, the blue line, you can see we're headed higher in this market. Notice how the cyclical lows have been pretty consistent here. Buying point, buying point, buying point, buying point. Oh, and we have one coming up about the end of June. So traders and investors should be looking at Moody's for that. Also, we see the seasonal pattern. We start to dip down and then come up. And again, we can look for when professionals start to buy it. That's when we usually rally in most any stock, as well as Moody's. The real problem with cycles is they tell us when a move will begin, but not the size of the move. So that's a weakness of cycles. Here's Apple as an example. There's a buy point here, it rallied a bit, not a lot. Here's a buy point, it rallied a lot. Here it rallied a lot. Cycles just say, oh, look at this. Apple's close to a market high, an intermediate term high, a pullback that then in late July, the first part of August, let's start looking for buy signals on Apple. Isn't this neat? We can see into the future what's happening. Does that make our life a lot easier? Oh yeah, it sure does. On the seasonal factor, Apple gets strong into July, the first part of July, and then kind of phases off. Again, look for the accumulation, our money flow index. When the funds have been buying it, that's the best time to look for Apple or any stock to rally. So it's a nice way of combining timing with, the fundamentals of the market. Right now, notice that the flow of funds has been really to the short side. People have been, if more money has been getting out of the market, and that's typical when we top out. So that makes sense with the cycle forecast, which is suggesting the same thing. So if you're long Apple here, intermediate term trading, tight stop, look to take profits and then be a buyer on the pullback. Oh, and a special treat coming for you. We talked about this earlier. What is the treat? This is going to be really fun. A new thing I'm doing. I think you're going to enjoy it. I'm going to start doing a letter called Focus on Stocks. It'll be starting this summer. I'll be doing a monthly written report on individual stocks and the stock market, like what you just saw, forecast reports, updates, finding the best stocks in the market. And then on a mid-month online live meeting with you. It's not enough to just write a letter. I want so we have some interaction. Basically, most of the people that follow Larry Williams are kind of in a Larry Williams family. So why not get together once a month online? We can do that now and discuss it further in detail and have an update on what I've been writing about. And the good news, this is brought to you by StockCharts.com. The first 2 months, free. So you can see if you like it, don't like it, whatever. Follow me for a couple of months. We're not quite ready to do it yet, so stay tuned for the details. They will be coming. So it's going to be exciting. Hopefully around the 1st of July, maybe, we'll get this going and kick it off. So stay tuned. Okay, more stocks. Microsoft. Look at Microsoft cycles, pretty good on the buy side. So we usually rally. Another rally coming up around the middle of July for Microsoft. We should start to pull back in this market, then move back to the upside. So if you have short-term profits on Microsoft, look to take them. Longer-term investors or people that really like the stock, look for a buy point. There's one coming up. Cycles tell us around the middle of July, the very first part of August. That's my visibility and our roadmap for Microsoft. Seasonal pattern, pretty much the same. We should start to go up, then come down. Again, looking for a money flow index. When these guys are starting to buy, that's really a good time for us to get into the market, a nice way that you can confirm a trade in the marketplace. Oh gosh, have you ever listened to talk radio? Do they have a love affair with gold or what? Oh my gosh, they're always buy gold, buy gold. That's all you hear on the talk shows, radio talk shows. Well, the last 13 years, this is the last 13 years, gold's gone really up, down, back and forth. What about gold anyway? Well, if we look at gold versus stocks, they both, since 2007 to since 2000, they both gone up proportionally just about the same. The only difference is the red line is stocks. That's been an easier path than the gold market. Interesting point that they don't talk about on talk radio. Gold bugs really cut their teeth on inflation. We had big inflation in the 1979 area, and gold went way up. And everybody thought, well, inflation drives gold. You hear that all the time. Does it? You hear it on talk radio shows. Not really. This is what followed. Notice that we had a big increase in inflation in the 1990s, and gold went down. Inflation continued going down. Then it went up quite a bit, 2000, 2001, 2002, and gold didn't. It stayed flat. And finally, it started to pick up when inflation started to decline. So this idea that gold follows inflation, it's not a good idea. Another example, gold has a huge rally in the marketplace and inflation is going down. It should be going up, right? When we inflate, gold should go up. Then we had this huge inflation starting in 2020, 2021, big increase in inflation, and gold, well, gone sideways basically. So if you're really interested in gold, I wouldn't listen to talk show radios. I would certainly think there's more to gold than inflation. If we look at the rate of change of inflation, we also see some relationships that when gold inflation increases the rate of change, we usually see gold rally. So, I don't know that we can really use inflation as a sign. I do see our current picture, because we've topped out in inflation, which suggests that gold will start to come to the downside. In other words, inflation can lead gold. And here's an example of how it has led it. So probably fundamentally, it's not as bullish of a time as it used to be. We can look at cyclical bottoms. There's a bottom coming up in August. This is typical for this market. Gold usually bottoms. It has a seasonal rally in August most of the time. So let's look for a buy point coming up in this market. It's had a very strong 55-day bottom in it. So we're in one right now. And then again, about the first part of August, there we are again. So early August, we got to really focus on looking for long positions in the gold market. Gold seasonal pattern right here, July, August, it really starts to pick up to the upside. See the same thing happen last year. Of course, you can see this true seasonal factory in StockCharts.com. So again, let's start looking for gold in August. So just remember that we're going to be doing the monthly report with the online live meetings, and you might want to get registered for that. You can go to ireallytrade.com and register there if you want to. There's no cost or anything to it. Obviously, just get on our mailing list and we'll let you know when we're ready to start the focus on the stock market. Well, I hope you've learned some things today. I hope you've seen that we can see the future for quite a few stocks, as well as the gold market, and we now have a visibility of what should be happening in the future. So until next time, this is Larry Williams, as always, wishing you good luck and good trading.